In this video, I'm going to talk about something called undeposited funds in QuickBooks Online. I'm in the chart of accounts, which is under transactions, chart of accounts, and you can see undeposited funds right here, and it is considered an asset account. And basically all it is it's a place to temporarily hold payments or funds that have not been deposited in the bank yet. So it is basically what it sounds like. I'm going to view the register just so you can see what's in here. So you can see that anytime a customer payment is made and posted to this account, I'm going to edit this so you can see it was posted to undeposited funds. It increases this account. And then when that money is put into the checking account through a deposit right here, then that decreases this account. So money's just going in and out of here. So I'm going to walk through a demonstration using this account and then talk a little bit about why you would want to use this account as opposed to just posting the payment directly to the checking account. So first, let's post a couple of payments. So I'm going to go to New up here in the top left corner, Receive Payment, and post payments to a couple of customer invoices. First, I'm going to post a payment to Cool Cars. This payment was received on the 19th of February. It was a check. And it was for invoice 1038. And what we want to do here is make sure it gets deposited to undeposited funds, not the checking account. So we just save and close or save and new. And then we're going to post another payment. Okay, so now we're posting a $75 payment. And again, we're going to make sure that this gets deposited to undeposited funds. So I'm going to save and close. And then let's assume that a few days later, they deposit those checks into the bank. So we'd click on New, Bank Deposit. And here are those two payments right here. And I would choose Checking right here because that's the account they're being put in. And I would put the date. So it's a total of a $200 deposit. And then I would just save and close. Okay, so then it decreased this account now that I put them in checking. And then if I go to the checking account, you can see the $200 on the deposit side here. Okay, let's go to the bank transactions. So on the left, I'm going to choose Transactions, Bank Transactions. And you can see that that very nicely matched up to a $200 deposit right here. And I can just click Match. And that's all there is to it. Like I said, basically that account is just to have money flowing in and out of it, and it's basically holding it there for a few days. Now I want to talk about why you would want to do that. First of all, over on the transactions page, it was much easier to match that deposit to the bank transaction because I had already batched together what payments that deposit consisted of. So it's really helpful and accurate to put payments together according to how they were deposited together. And then another reason is you want your financial reports to be accurate and your checking account to be accurate. If I go to Reports and I choose Balance Sheet, now you can see on this balance sheet that if I were to run a balance sheet as of, let's just say the 20th, one day after posting the payments, because remember I did those on the 19th, and 3 days before posting the deposit, you can see that the $200 is sitting here in undeposited funds. And then if I ran a balance sheet for the 23rd, now it is no longer in undeposited funds, and it is now in the checking account. So $200 isn't making a huge difference in this particular company on this balance sheet, but imagine if you had a $10,000 payment. If you had posted it directly to checking, you would think you had a lot more money in your checking account than you actually did. So I'm going to walk through that demonstration. So this time I'm going to go back and undo what I just did. Okay, so now basically what I just did while off camera is I deleted the deposit I just made, I unmatched it from the bank transactions, and I'm going to start over and repost those payments. But this time I'm going to post them directly to the checking account, which would not be the way you would want to do this. So I'd click on New, Receive Payment. Okay, but this time I'm going to deposit directly to checking. And let's go ahead and post the other payment. And this time, again, I'm depositing to checking. Okay, so if I'm in the chart of accounts and I go to the checking account, I can see those two payments there. If I go over to undeposited funds, those payments are not here. And then I'm going to go back to my bank transactions. So this time, that $200 deposit is not automatically matched to anything. Now I can click on this match button and go find those payments. But you can see that QuickBooks is trying to auto match to completely incorrect payments. It's trying to auto match to an open invoice and a couple of other payments. So you have to be really careful here. It gives you suggested matches, but I can uncheck this button and it will give me more matches, but then I end up with this huge list of items. It's really easy here to make mistakes in matching that $200 deposit to the actual payments that were in that deposit. And then another thing that can happen is sometimes people will be here and they'll post to the income account instead of matching it to the correct customer payments. So you can see where this would get really messy if you're not careful. Because if I were to post this to income, then I just double posted income. I've got two payments that are not matched to the correct deposit, and then now I just posted the income again instead of matching it to the invoices and the invoice payments. Okay, let's look at the balance sheet again. If I were to go to the balance sheet on the 20th, there is nothing in undeposited funds because I didn't post anything there this time, and it instead went to checking. If I click on this checking amount, I can drill down and it shows me what's in that account. And there are those two payments. But this is not accurate because those payments actually have not been put in the checking account at this point. They're still sitting in the office undeposited. Now $200 isn't going to make or break the company more than likely. But if it was a larger payment like $1,000 or $2,000 or $3,000, it would make them think they have a lot more in checking than they actually did, and it would just be really inaccurate. So it's definitely better to use the undeposited funds account for that reason. And it's just a good accounting practice for your accounting records to flow with what actually happens in your business. So if you have any questions, feel free to comment below, and otherwise, thank you for watching.